right, good morning, everybody. Welcome to Stock Analysis Friday. Great to have you here. Hope everybody is doing good. All right, so what do we got today? November 7th, all right? So let's check it out. We'll take a look at the charts. I see people are typing in stuff already, which is great. So just remember, type in caps. Let's do 3 at a time like we usually do, and then indicate whether you're already in the trade, thinking about the trade, et cetera, et cetera. That way I can detail the analysis specifically for you. And of course, we're going to do stocks and ETFs, so you can choose either or. All right, let me go through the usual administrational items. I know you guys love this so much. All right, so the first thing we got to do is talk about the risks involved in trading. Like I always say, without that risk, there is no opportunity. And it's so true. But there is risk in trading, and there's risk in everything we do. And you need to know what your downside is and then prepare for that in case it happens. And you do that in trading by calculating your trade size. In other words, how many shares of a stock you may buy in order to keep within that risk control guidelines. Or if you're trading futures, those would be contracts, etc. So always know that. I've got some books I'll show you in a minute that can help you know how to determine that. Also, too, check with your financial advisor before taking any trades here. I can't guarantee anything. You know, everything is my analysis based on software that I use. So you still need to run by anything I basically suggest here, past your financial advisor to be sure it's suitable for you, because I don't know your personal situation. They certainly should. And finally, past performance doesn't guarantee future performance. All right, I got a bunch of books out there on the market. You can get these on Amazon or any major bookstore, all major publishers. My latest book, The Art of Trading, which came out published by Wiley, is my newest book this year. It has everything in it. I get that, okay? That's pretty concise. It's a long book, 608 pages. If you want something more specific, like on money management, I have that as well. Also, the Elliott Wave 2, that was published by McDowell, and that's out on a form of technical analysis called the Elliott Wave. And then I have the Survival Guide for Traders. So we got a bunch of books out there for you guys. Pick and choose. All right, so we're going to be using software today. And basically, you know, we've been doing this now for 30 years. And traderscoach.com actually started in 1998. And we got incorporated in the year 2000. So we've been doing it quite some time. Software was developed and released in 2003 called the ART software, now being used in over 85 countries worldwide. And by not only private investors and traders and day traders, but also too by hedge funds. So that's available. I'm going to put some links up in the recording if you're interested in getting that or learning more about it. Okay, so that's certainly there. All right, everybody stop what they're doing. Give us a like, okay? We're trying to grow the channel, so this helps a lot. Gene, who keeps track of all the stats, say we're doing great. We're growing incredibly quickly over the last several months, and we want to keep that momentum going. So please take the time and definitely give us a like. All right. If you're interested in keeping up with what the market's doing, and I strongly suggest you should, you may want to consider my MOR, which stands for Market Opportunity Report, that comes out on a weekly basis along with a video. And basically, I go over all the major indexes, and we also have stock picks too, new stock picks each and every week. So it's very inexpensive, very affordable, and you really are probably going to need this now more than ever, simply because the markets are at such a critical level. All right, now, the other exciting thing to share with you is tomorrow we're starting a brand new service, so to speak, here on YouTube. And it's going to be about 30 minutes long, and we're going to cover a specific topic each and every week. So I think we're going to kick it off tomorrow with talking about the ART software. And that will be right here on YouTube. Just like you logged in right now to watch this, this will be a live presentation on YouTube. So easy peasy access, right? And you can ask questions in the comments area, and I will answer that, but I will have a format of what I want to cover. And so, you know, every time we do this, it's going to be a new topic. I noticed Gene put a link into the MOR report. Thanks, Gene, if you want to check that out. All right, now, this is kind of a cool thing, too. you know, when we look at charts, and we do it here today, and we've done it in the past, you always see me draw in fair value gaps, talk about order blocks, talk about different forms of price action that we look at. And that's what this course in front of you is going to cover. And basically, we're calling it the Advanced Price Action Trading Made Easy. Now, if you've ever watched some courses on price action, they can be pretty detailed to a point of exhaustion. What I'm trying to do with this course is take what you need to know to trade with it and trade successfully with it and make it as easy as possible. That's the purpose of this online home study course. It's been released. We have had a lot of people sign up for it, which is great. It's going to be released November 30th. So this is we have a pre-release special, and Gene will put the link in. It ends tonight. Okay, we've had it all week. So a lot of people have taken advantage of that, and it will go up in price after tonight. So definitely jump on that. And this is something, no matter what your trading style is, all right, we're going to cover so many different concepts that can add to that. So if you're using the art software, you will find something in this course that will help you use that even better, or any strategy. We're going to touch on, like I said, fair value gaps, order blocks, ICT models, and things of that nature. So we're going to cover a little bit of everything and talk about that, but strip it down so you can actually understand it without having to, go through some monotonous information that is so often prevalent on courses on price action. So that is link. Gene just put the link on that. Thanks, Gene, in the area there. All right. And I think that's all the administrational items I want to cover. I'm going to start out with Bitcoin. A couple of things I want to cover here before we get going into your picks, and I will get to your picks in just a moment. But first thing I want to talk about is Bitcoin. All right. So Bitcoin took out its previous low right here. All right. Let me just get my pointer. My pointer does this. Kind of annoying. I don't know why it works before I get going, and then I get going, and then I have to restart it. All right, so give me a second. There it is. Okay, so I'm going to open up this chart a little bit more so you can see it, because I know sometimes things are hard to see. So let me do that. All right, so here is Bitcoin. Now, this is BTC. So if you're trading GBTC, basically it'll follow BTC for the most part, okay? All right, so we broke out on this bottom here, and I was hoping we wouldn't do that, because that means that it was going to target down here. It certainly did. Now, we got a little bit of a bounce here, but it's not convincing enough, all right? So I'm a little concerned, and we have not hit the weekly fair value gap over here. And we have a little bit of equity down here. And let me just do one quick thing here on that equity. See how that's shaping up. We haven't quite hit the weekly equity. Now, what that means when we say equity, this is equity of traders where their stops are. So that's a liquidity area, okay? So equity liquidity, okay? So probably it's going to aim for that. I don't think it's going to get that close and not go for that. Also, there's a fair value gap here. We got a little bit of rejection here, but I think they're going to back it down and take this out. The bigger question on Bitcoin is we got a huge fair value gap sitting right here, okay? And I think they're going to target that. All right. So I think Bitcoin's coming down to anywhere from 86, probably to about 93 before we should see a rebound back up. Now, what concerns me also a little bit about this is our target was originally 130 and we got to about 127. I'm calling for another high because we have a green PTF, which is one of my indicators that I absolutely love. Okay. This indicator has saved my butt so many times, I can't even begin to say. With a green PTF like that, it's calling for a 75% probability of another high. Now, if it changes to red, that means it was wrong. That's one of the 25% times it's wrong. But I rely on it. And so it's kind of calling for one more high. I'm going to tell you, if we get that next high, all right, if you are not holding Bitcoin for your grandchildren, so to speak, I would dump it. Okay, so I think we got one more high before we can say sayonara to Bitcoin for a while. I know that goes against everything you might be hearing out there, but the charts don't lie. And that's kind of what they're saying. If this turns red and we start going below this fair value gap here, which is a representation of this one, then chances are you're not going to get another high. Okay, so that's where we are right now with Bitcoin. So, you know, if you had drawn a trend line up originally, and I had one of these drawn, one of the things you certainly could have done is scaled out of some here as well. But you know, you still got to, I still do feel there's another high coming, and we'll see. But I think we got more lows before more highs. So I just wanted to share that with you because so many people follow Bitcoin, and I wanted to put that on the radar. All right, let's jump in. Al, you are the man today. All right, so we got Al, long question mark. So he's not in these. All right, so he's thinking about this. AMG. AMG. Let's see what we got cooking. All right, long question mark. I would not go into this. Why? Why do you think? You don't have to answer, but answer to yourself. So one of the reasons I don't think you'd want to go into this is simply because how many pyramids, which is one of our indicators we use, all right, do we have in a row? Well, P's, we got 1, 2, 3, 4, 5, 6. And if you add in the MPs, which are the minors, indicating a change in trend in the beginning, you got too many P's. And what that means is statistically, we have a formula for this. Statistically, after you know, a certain amount of these P's, the trend becomes too mature to enter. In other words, you're setting it up, you're getting in too late. Okay, and that's what the case is here. Now, notice the green PTF on the weekly. So okay, it's going higher. Problem is, okay, at the end of this week, we've already done that, and it's going to turn yellow. So this is a no-go. Okay, let's see about EGAN. I think it's going to go into a correction, and then we can take a look at it maybe after that. Same thing with this, okay? Well, this reminds me of when I first started trading. I used to subscribe to a sector analysis. And what I would try to do is focus on all the sectors doing so well. Well, by the time I took a look at the stocks in the sectors and the sectors that are doing so well, they had run up so much that every time I went in, they corrected on me and I got stopped out. So, you know, those services you got to be a little bit careful with because you kind of want to not get in on the premium part of a trend. In other words, after it's already gone up. All right. Try to always get in at the discount area because that's what the institutions are doing. The pros are doing. All right. Again, how many pyramids? We got 1, 2, 3, including this 4. Got some down here. But I would wait for the correction. We got a bearish bar this week, probably going higher. But we got some fair value gaps here and some here that it may shoot for. So it looks like it just took out equity here. If you are interested in a short-term trade and you want to try to draw a bull flag, you can do that. But I see some equity down here I'd wait for, okay, before thinking about jumping in. So what I'm trying to say is wait for a pullback, okay? IDXX, see where we're going with that. Okay. So green PTF right off the bat. Again, it's run up a lot. This is a bearish bar on a gap here. So that's kind of interesting. Got a gap here that was filled and another gap here. All right. You know, is it going to make another high? Probably after it fills this gap and then goes back up. That's a possibility. Okay. So, you know, I think personally prefer to wait on something that is more in the beginning of a trend versus late. Okay. So I would classify all these out as kind of late in the trend. Okay. It just increases your risk because you got a pullback situation. All right. Let's keep going here. Ed, how are you? Okay. GEV. Let's take a look at GEV. Okay. So all potential new buys. Okay. So it's still moving down, so it's not quite a buy yet. So it is a potential buy. All right, let's get rid of this. And I would say a couple of trend lines you could draw. We'll start out with this type. All right, then we'll go shorter, this type. So it's really, at this particular point, it's a normal bear flag would have been just straight across the first pullback. Normally with a bear flag, and we'll cover this in the courses, it's a certain number of price bars. And if it exceeds those price bars, then it doesn't really qualify as a bull flag anymore, okay? So in the case like this is probably going down to the fib retracement area. So we want to look for some type of turnaround here. And on the weekly chart, you got a little bit better of a scenario here for a bull flag, but still, again, I still think it's correcting, as you can see on both time frames. So I would take a look at it when it gets into this fib area. We've got some structure. Let's see what we got cooking here. It's going to blow through this. It's already taken the equity there. Probably might even take the equity here, but let's just say right around here is probably where I think we're going to see it go down to, okay? And then we should see it come off the bottom there. So that's kind of what I'm thinking on that. All right, and let's take a look at your next one, which is Oracle. So the NASDAQ's down about 1,000 points in the week, okay, for the last week anyway. So she's been coming down a little bit. So most stocks are coming down as well, because that's how the NASDAQ works. All right, tech stocks will come down and bring the index down, right? All right, so this one's coming. Notice how it filled this gap here. So where is it going? All right, that's the question. Well, the weekly chart's a big help for this. Huge, okay, huge. Let me just draw this out. Huge fair value gap here, all the way up to here. Now, what's concerning about this, though, however, you have to know how to use fair value gaps, because some fair value gaps are actually a form of manipulation in itself. And in this case, we're getting a close. Let's see if we close. We haven't gotten rejection yet on this at all, okay, on this fair value gap. You got an order block sitting right under here. And let's see if that holds. I will tell you, a year ago, things changed a little bit in terms of markets. You used to be able to, if you saw a bar like this, for example, okay, a stop under here is where you'd want to put that. However, I have found that they're running those, and you need to put a stop under the order block, okay? Here, that would mean under this area here. But if we get a close below here, that's extremely bearish. And that may turn this fair value gap into an inversion fair value gap. All right. Not saying that's happening yet, because, week's not done. We'll see. So if we don't get any support at this order block, then it's going down a lot further. And we've got some pretty good wick rejection here. Okay. And notice another thing I'll be teaching in the course is what the percentage of retracements back into the wick and where that goes. That can be important as well. All right. So, green PTFs are still indicating a move up. We still got a trend down. So let's take a look at it next week. Okay. But it's a no-go for right now. Okay. QSG. All right. So this order block, we looked at this one before, right? So this one here, okay, started moving up, all right, and then reversed right down. And if you notice here on the weekly chart, okay, if this reverses within the wick here and starts to reject that, then we're going down further, okay? And that's exactly what happened. All right, so now what do we do? Well, now you got to keep redrawing your fib retracements until the correction's over. And so we'll do that. I would at this time too think about putting in something like that. All right, we need to get a turnaround pretty soon on this so that situation can be respected. If it doesn't, and we go below this, which we might already have, then that is not a wave 4 anymore. So it's not. Okay, it's probably a wave 2 of some degree. So in this case here, let's remove all this. And at this particular point here, let's wait and see. Now, wave 2s can retrace the entire distance of the first move, okay? And this thing just came out, all right? So it's impossible to know with a stock that came out in 2023 on the weekly chart with so much little history for you to make an assessment that is, you know, an accurate assessment on that. So in any case here, let's see if we get a turnaround. And then at that point, it might be a good buy simply because the PTFs are still green. Let's see if this order block down here holds it. Okay, that'll be interesting. And there is equity under this as well. So we'll see. All right. Okay, so that's those are potentials, but no go for right now. Okay. All right. Let's see. Art information. Okay. Okay. So when I mentioned art, I guess Gene put this link up there. Thanks, Gene. All right. Now, CLF. Okay, you're bearish. CLF. Got a little bit of a congestion here going on. All right. So I was doing some traveling. So you know how that goes. All right. Let's see what we got here. All right. So that so far, that same type of thing. This is not holding here, and we're right down at the order block. Okay. Where is this going? All right. Well, down for right now. Are they going to shoot this equity here? Maybe. Okay. I don't think they took it out before. So they'll try to shoot for that, I think, maybe. Now, the only thing here we'll keep an eye on is we got a bullish fair value gap right here. Okay. So when we have something like that there, they may be targeting that, and they, okay, are the big money players. Okay. So that's kind of what they're, you know, again, if you're trading with millions and billions of dollars, if you just go in and want to take a position in something or day trade this stuff, you can't just go in unless there's liquidity, or else you're not going to get a good price. Price is going to shoot up because your orders are big. So you got to have an area of liquidity, which means stops. All right. So they look for stop areas for accumulation. So if they're, you know, and then run it the other way. So in case like this, probably coming down here to some point. All right. So let it unwind a little more. All right. PLCE. So basically everything we've looked at so far looks like we've got some more downside. Nothing's turned around. So what does that mean for the overall market? Probably going to head down again next week. Okay. So let's see how that plays out. All right. PLCE. All right. So we're range bound on this. All right. You can see it right here. You had a pyramid. Ranges are really tough. Okay. They can shoot. If you're a trend trader, a range can just kill you. Okay. So you got to really be careful on those. So you got to wait for a breakout with some follow through. I would not go in the range here. Okay. It's just, you know, you might just range for another month or so and then get chewed up. All right. So does it possess potential here? Absolutely. Now, if you wanted to go in here and lower your trade size using the weekly chart for a long-term trade and put your stop way at the bottom here, that's fine. Okay. That means you won't get chewed up here. You'll just have to wait. So that's fine too. Or you could wait for it to take out the next high. All right. So I do think there's some things looking really good here because, as you know, you're not getting in to the long side at the top. You're getting it near the bottom. So I love that. All right. Bullish divergence. Big check. Okay. No PTFs. That's okay. Those are neutral, but nothing bearish anymore. All right. And I can draw a trend line up. Okay. Pretty good. All right. You can kind of draw one up here too. All right. So at this particular case, I would say I'm going to put this down as a buy or a long-term trade. Buy long-term weekly chart. If you're going to go for a shorter type of trade, wait for it to break here. Otherwise, you're not going to be happy if it trends to the sideways. If you're a long-term, you're willing to stay in it for 6 months to a year, okay? So where is the target? I would just simply right away just draw fibs, easy peasy. When we get up to this range, that's your target, all right? And when you get to $30, which is right around that 23.6% fib area, start ratcheting those stops up, okay? So that's kind of my deal on that. All right, let's see. So I would not go bearish here, okay? I know you're looking for bearish. I would not do that. OMNI. I actually like it for a bullish one. All right, so let's see what else. Now, Al, I know you like options. And so when you have an option, did I type that in right? I think I did. All right. I don't know why it's not showing up over here. Let's try that again. All right. Maybe it just needs to load. Weird. Oh, Al, this one looks like maybe it's done. Did it change the symbol? OMNI. Did I type it in right? Yeah. Yeah, that's no longer valid. Okay. So I guess I wouldn't go short on that one either. Okay. All right, Gene with another link on the MOR report. Thank you, Gene. Okay, so let me find out where we are now. Okay, back to Ed. All right, MP. All new potential longs. Good. All right, let's see what we got cooking here. All right, so we looked at MP, and looky. What did happen? Ooh, look at that. For some reason, it came down to that area, and we're starting to see some rejection. Isn't that amazing how that happens? People often wonder, well, why did prices stop there? Well, once you understand price structure, you start to see why things happen. All right. So there's your fair value gap. A lot of orders sitting there that wanted to get filled transactions. So we got there. It happened right in a fib level. Awesome. All right. That's even a bonus. All right. Now, the question is it over? Well, it looks like it may be. Okay. We got a green PTF here, but it's very close to going red. So what I would like to see, I don't like the fact that it's closing inside the fair value gap, even though we got a wick on that where there was rejection below it. So I'd like to see some more follow through over the next couple days, okay, to see what if we're truly getting rejection here, because it could dip down one more time. Okay, could go down just right around here. You have another order block here, or another, have an order block here rather. Could go down and test that one for all we know. All right. So we haven't had enough of a turnaround. Let's take a look at it next week. Okay. That's MP. Dash. Pyramids were right on money on that one. All right. So Dash. Ooh. All right. Dash. Check out that price bar. I feel like I'm on the NASDAQ now. All right. This is how it has been day trading. We've had the average price bar on a 1 minute chart on the NASDAQ has been 30 points. Okay. So, if you traded one NASDAQ mini, that's what, $600. So you got to adjust your trade size. And if you're trading a prop account that has a trailing drawdown of 2,500, that's too much. All right. So you got to drop it down to the MQs. So it's kind of an interesting time day trading these volatile markets. Definitely will test your risk control. All right. So back to this. All right. So it's heading on down. All right. Got a red PTF. There's no signs of it turning up. This is extremely bearish. All right. So we'll probably get a little bit more follow through. And let's take a look at that next week. Okay. So that's definitely a no-go. All right. So CRMD is our next one. Okay, let's see about this one. Definitely a range. Now, this is kind of cool. When price structure is such that the pyramids can fractalize the range, so to speak, you get these forming blue colored pyramids, right? And the blue colored pyramids are potentials. So it's waiting for the market to do something in order for them to actually trigger. If it goes down, it will trigger this one that's bearish. And then these will disappear. Okay. If it goes up, it will get rid of this one and then these will trigger. Okay. So that's how they kind of work there. All right. So that one is very interesting. It's definitely in a range on almost both time frames. So we got a green PTF here that says it should resolve itself to the upside. So if you're looking for a bias, that would be it. Now, let's take a look at things a little more closely here. So let's just draw a couple of things that may help us here. And lo and behold, what do we got? We got a pennant, okay? A break on that pennant is the direction it's going to go. All right? It has to close below it with a little bit of conviction. Okay, so that's kind of where we're at. Could just take out the equity here and then bounce back up. So it may wick it below that. That doesn't count. It has to be a close, and I would say of at least 2 price bars. All right, so that's CRMD. All right, thank you, thank you. All right, Gene put the link up for the price action course. I appreciate that, Gene. All right, AXON. All right, Ed, let's see what this, another potential for some longs here. So notice we're not really seeing too many longs, are we? Okay, what does that mean again? Market's going to continue selling, I think, for a while. All right, so we got a red PTF showing up here. So right away, that kind of makes me not want to take a long. And we've got a trend down, and we got this huge price bar for this week. So the next question is, where is it heading? All right, well, we got structure there. We also got structure here. So, all right, so let's took out equity there. There's equity here, and there's equity here. So let's see how far down it wants to go. But you have definite structure here. So that's that. If we do a measured move on this price bar, it says it's going to take this equity out and this equity. Okay, so that's I think you got a little while on that one. Okay, all right. MSTR. All right, so this stock, I think this one is MSTR. I'm not sure. I think this one may follow cryptos. Okay, and there it is. Okay, so that's where we're at. Okay, and let's see. Look at this little gray area here, and look at the blue line for the equity. So I think when we looked at this last week, I was saying it was probably going to shoot for that equity, and it certainly did. All right, now let's see if it's going to turn around. Nice move down. We've had a couple of good patterns to the downside for a completion. We're seeing a little bit of rejection here. All right. Okay, so we'll see. If we get a change in structure here, you want to go long. I'm going to put this one down as a watch list, okay, because that's going to be a great long trade at some point, I believe. Nice wave 3. We just want to make sure it's done, and notice how it's in the weekly fib area as well. Okay, so that's kind of interesting. Now, here was an order block on this leg up here that did not hold. So just because you have an order block or a fair value gap, they have to hold, okay, in order for you to think they're support areas. And you know, true believers of fair value gaps would not label them as support areas. It's just basically areas that either will turn into a inversion area or not. Okay, they don't like the word support or resistance, I think. All right, but I don't care. I use that. All right, so in any case, it took out the equity here, so it's done its job. All right, and again, when I say that, what do I mean? Well, where do you think all the stops were? People were thinking this is going to go straight up. Well, they're right here. Okay. So if the trend's not strong enough to continue, it reverses and the sellers take control, then the banks jump on that. They're going to want to take the equity out down here. And that's exactly what they're doing. All right. But we may get a turnaround now that the equity is taken out. So we'll see what happens with that. All right. So I'll put that on the watch list, bring it back next week. All right. Lowell, how are you? All right. Corn. Take a look at that. Okay, just curious. Okay, so you got green PTF here, a little bit of red still here. We got bullish divergence building in the owl, which is good. We have some change in structure here, all right? Maybe a break in structure, all right? But we haven't taken out this high yet. So basically, we've got some good wicks here. Let's just go over here and see if it took out some equity here. Okay. Still got some equity here to take out. Didn't take out there. It did go into the order block area here. Okay. Okay. I wish it took that equity out. It would make for a far easier decision. Okay. So, let's see if there's any. This is the equity I'm talking about. This line right here. Okay. You can see it better on this daily chart. Let me just get that over there. Hold on a second. Okay, so I would have liked to have taken that equity out, but it did not do that. All right, so now what's it going to do? Well, it's definitely, you can definitely draw a trend line. Okay, so that's a change in structure and a break in structure, because I think we went above here. Okay, with this pyramid point there. So I think this warrants a long trade. It's not a slam dunk because we didn't take the equity out. So that's the only thing. Let's take a look here. And we got a situation here where we certainly fibbed it. We took out this stop here. Okay, equity there. So I would say definitely would warrant a long trade. So I'm going to put that down as a buy. All right. And it's not an A+ trade, but I'd say it's probably an A. It'd be an A+ if it took out the equity. But sometimes it doesn't do it. All right. So, and we have a change in structure here. So that's a buy. Okay. And I put your stop, you need to put your stop low enough. Let's just say, make sure you survive any fair value gap pullbacks. I'd say put it under here or here. Put it here. Below this pyramid's good. That's a good place. The pyramid's got it. 1740, a little under that. Okay. And it's only 1784. So if you want to back it down even more, that's fine. But your risk here is that it will have one more leg down. Take that equity out. Okay. All right. But I'm going to put it on the buy list. Okay. It's okay. Let's see what we got here. All right. So this is another one you're curious on. All right. Red PTF. All right. So red PTF. I'm more interested in this in a short trade. All right. So Al, here may be a good short trade for you. All right. So let's see what we got cooking here. Okay. We came down here. Okay. So we had a fair value gap here that may be holding bullish. Okay. And we got some bearish fair value gaps here. All right. Very interesting. Okay, so the encroachment on here is going to be halfway up. So wouldn't be surprised if we move back up a little bit further in this. If this fair value gap holds, then it's going to dump. If it closes, to be on the safe side, if you want to wait until it closes below this bullish one, in other words, a close below this, I think you can sell the pants off of it. All right. Put a buy here and Oops. Put a buy here and a partial here. And you should take this out here and possibly a final here. So if we take this out, all right, I'd keep your stop where it is. Take this out, I'd move your stop just past break even. Okay. So I'm going to put that one down as a short. Maybe I shouldn't. All right. I'll put this one because it really, I would kind of, at this point, we're seeing a little rejection, but I'd like to see it close below this bullish fair value gap. Okay. Then it would be an inversion fair value. All right. LYFT. And again, some people would take it if they see rejection off that other one. All right. So let's take a look at this LYFT here. Green PTF got a change in structure, broke out of the channel. See what the daily looks like. That looks pretty good too. Where is it heading? You got a bearish, huge bearish fair value gap here. Okay. I've got to put a little bit of dump in the works. That could be manipulation. So we probably will get over that. All right. So a lot of this stuff, you know, when you talk about fair value gaps, is that some of them were formed during manipulation phases of the market. And, you know, this was a move to take out the equity down here. So I think that was manipulation. Again, let's see. I don't know. It's not a huge amount of, and manipulation is not bad. Okay. Don't get me wrong. Manipulation is how the market works, you know, and it's buyers, bulls versus bears. Okay. And they both do it. All right. So in this case here, we had a nice long channel. Now a move up. We have a green PTF, but that doesn't help as much because that's just saying it's going to go above 23.54. So 24, which would put it into the fair value gap. So from a standpoint of, you know, a quick scalp, yeah, you could go long, but you'd want to cover pretty quickly. Okay. Because you're not sure it's going to go above this. This may be an area where it stops the move up and it sells off again too. But we do have green PTFs on both time frames. So this could be a scalp to the upside. All right. So what do you do in a case like this? Well, all right. If prices get above, close above this bearish fair value gap, and that means it has to get above like 33 or something, then chances are you're going to have a pretty good leg up. Otherwise, it's going to create headwinds, but it should go up a little. I'm not going to put it down as a buy because of that, unfortunately. All right. Stuart, how are you, Stuart? All right, KO. Coca-Cola. Let's see what we got here. All right. Don't know if you're buying it or in it or what. I would not be trading it. Okay. It's kind of a messy chart. All right. Most people buy Coca-Cola and have it in their long-term portfolio. All right. So, you know, trending up right now, no bullish pyramid hit yet. We don't quite even have a change in structure yet. So we've got a range-bound market here. Okay. You can see it right now. Let's see if we can draw a pennant. Sometimes in these range-bound markets, we get the opportunity to do that. And I guess we could do that like that. Okay. So a break above that might mean another leg up. Pyramid will have you long with a stop under here. This thing will probably go yellow at that point. So I'm not going to recommend it because for me to recommend it, I would have to have a break above that pen. Okay. All right. Let's see. Okay. Ed's asking, how would I access the webinar tomorrow? Well, basically the webinar tomorrow, Ed, is going to be right here on YouTube. So you come right back to our YouTube channel and, you know, just like you find the live one for this, the live one will be available for that as well. Okay. And Jean's even got it better off than I have in terms of an answer. Okay. So she'll give you the direct link. There it is. I didn't even know we had a direct link. Okay, good. All right. Frank. Alexander, how are you? Good to see you here. Didn't mean to skip over you there. All right. Frank, how are you? Frank, there would not be a session without a question on IWM. I think that might be your second wife. Okay. I know you love that one. All right. UNG. All right. UNG is a good one. I was going to start out and show this one. So let's take a look at UNG here. All right. So UNG is starting to show signs of life. I was looking at this yesterday. You know, I want to be long on this. Okay. We went long once. We got stopped out. All right. So we have no more red PTFs. Okay. No greens, no nothing. But we do have a break in structure. Okay. On the daily chart. And I've been waiting for that. This pyramid is not a break in structure. That's just a minute break in structure. This, you have to get above this point here to have a good break in structure. And we got that. All right. So now we can draw a trend line. Okay. We also have extremely bullish divergence. Okay. So unfortunately, you know, it could retreat back and go into the channel again. Okay. So that's what you don't know. But you know, basically this one here, if you go long, all right, it may not move up quicker, but it may be a nice place to get long for a longer term trade. Okay. Target on this is around 44, 45 to 65. We're at 14. But it's hard to, it hasn't had enough of a breakout for me to really say, okay, the momentum is going to take off now. All right. You know, most breakouts on a channel fail, like 80% of them. So, you know, here we are at the upper part of the channel. So your stop would have to be way down here at the bottom. All right. Or you wait for a pullback. All right. Or you wait for a pyramid to form outside the grayed area. That's a possibility too. So at this particular point, we've only had really 1, 2, and usually you get about 3 or 4 before you get the breakout, 3, 4, or 5. So it's still kind of channeling. All right. So UNG is a good one if you're long term. So I'll put it down long term because I think it's okay long term. Showing structure break. So that's okay. So as long as you can put your stop at the low down here at 11, which is not a big deal. It's only at 14. So that may not be a bad trade. You got a huge risk to reward in your favor. Okay. So I'll put that down to the long term. All right. Back to IWM. Short profit on both. Okay. All right. Now, are you short or do you have a small profit? So when you say short, are you short or is it small? I'm not sure. All right. So this one here, all right, broke out of the micro channel, pulling back now, probably heading down possibly to the PTF area at this point. Let's see, took out equity here. That's a good sign. All right. Not break that. Not break that. Let's see what we got here. All right. So okay. So that's probably where it's headed for now. Okay. Now, the other thing too is if it looks like we might be getting a bearish fair value gap, possibly setting up there. So we may go down here, bounce back up to the fair value gap that's bearish, and then head back down. Okay. So I'm going to put this one down as a short. What do you think of that? Okay. 221 there. We'll put 221 right around this ballpark here. So that we'll see. We'll certainly see. All right. If you want to go short here, target this area, the encroachment here, the 50% area here, and then trail your stop real tight when it reaches that. Okay. So I would, you know, I don't know if you're long or short on those, but that's a great short. Okay. All right. Let's see what we got here. Alexander, happy Tea Friday to you. That's from Gene. All right. A couple hugs. All right. Al is a winner today with PLCE, and you're very welcome, Ed. Okay. Anything else? All right, that might be it. Okay, we're on for a lot longer than I thought. 50 minutes, pretty good. All right, so let me do a recap if you don't mind. Okay, and so the ones for this week, PLCE long term. That's usually in the weekly chart. CORN, UNG long term. IWM, that quick short that's in front of you right now. On the watch list, MP, MSTR, and RITM. Okay, so not too bad. Overall assessment of the market, probably going to come down a little bit more next week. Okay, so let's see how far this correction is going to come down. And then I think we may be in tune for a Santa Claus rally. Okay, that's what I'm kind of thinking. So I'm actually glad it's coming down right now because it needed to pave the way for an end of the year rally. Okay, and so we'll see. All right, so that's it for right now. Okay, so you guys have a great week. Thank you for coming. Things look good. Again, give us a like. Okay, we appreciate that. Ed, glad you liked it. My pleasure. Okay. If you like this, you're going to love the price action course. Trust me. All right. And don't forget, I'll see you guys tomorrow, I hope, because we're going to do the kickoff of the first free YouTube live study workshop. And I'm going to go over the art software tomorrow. Okay. A lot of people have been asking me questions on that. So I think that's a good one to kick off, so to speak. Okay. Gene, on these Saturday sessions, refresh my memory. How often are we meeting? Is that going to be a once a month type of thing? So I'll wait for her to answer me on that. She keeps all the schedules with this. I'm the content man. She's the scheduler. Okay. Maybe she stepped away. I don't know. All right. Okay. So she says that's still in the planning stages. Okay. Okay, good. All right. I think once a month we talked about. Not sure. We'll let you know. Okay. We'll announce it tomorrow. That'll be a good reason for you to come so you can see how often we're going to do it. All right. Very good, Ed. Good. See you there. Okay. All right. So that is it for today, guys. Have a good one. Thank you for coming. Good picks. And we'll see you back here next week.